All right, something that's been on my mind today is I keep talking to people about starting a Roth when they're young. And I've also shared a little bit about the success that my family and I have had when it comes to Roths. But there's a big difference between telling you what kind of success we've had and telling you maybe how you can have some of that success yourself. You see, when you first open up an investment account, it is understandably a bit intimidating. There's a lot of options. It seems really foreign. You're kind of nervous because the last thing you want to do is make a mistake. I understand all of these things. Plus, you're talking about money. You're trying to save for your retirement. You want to make good choices. So, here's a little bit of information that might be helpful to you if you're starting down that road. One of the things that you do when you first set up an account, usually you drop a little bit of money into an account with them. And so it'll just be in a cash account. It won't be doing anything in the very beginning. Once you've dropped that money in, you need to do a little research. Every investment house or every investment company, whatever, has different ways of going about that. There's nuances to the system that you've just got to try for yourself and figure out in order to know really what's going on. Once you have played around with it a little bit, or maybe gotten a professional's help to talk you through how to do some research or whatever, again, there's no shame in that, especially for the first time new investor. What you're looking to do, especially early on, is probably going to be something where you're dollar cost averaging, where you're dropping in an initial deposit, and then you're setting up monthly deductions from your checking or savings account to go into your Roth account. That's the first thing that you want to worry about getting finalized when you first start to set up your own personal Roth. Once you have navigated that, then you want to look for a tab that talks about research or filter funds or begin investing, whatever. There should be a way to narrow down sources. You can invest in a wide variety of things. There's a lot less options when you're doing, say, a 401k or something through work. We'll get to that in a moment. I don't want to get too far off topic here. I wanted to really get into some meat and potatoes of things that I look for. So once you find that research or filter tab, you want to tell it specifically what you're looking for. In this case, we were looking for mutual funds specifically. Okay? I've talked about it before, but it's worth mentioning again. Individual stocks carry with them a lot of risk because they can be really volatile. They go up and down a lot just during the course of a day. Whereas mutual funds, because they invest in many different stocks, bonds, other things, they are not quite as volatile. Now again, any investment you do carries risk, blah, blah, blah. You guys are smart. You can figure that out. I don't need to keep going through the techno legalese mumbo jumbo with you. I look for mutual funds. That way I can diversify my portfolio. Each fund invests in like 100 different things, so your stuff is automatically diversified. Once I've narrowed down the search options or the filtering to that, then I start to look at things like where I could set other settings. One of the big things to me is how long has the fund been around. So I'm looking specifically for its inception date. And if I've got filter tabs or whatever that relate to the inception date when that fund was started, I want a fund that's been around for 10 years or more. I want to know that it's been through a couple of different administrations and their economic policy. Everyone knows that who's in power in the government can impact the economy and economics. Love him or hate him, under Trump, the stock market went gangbusters. Under Obama, not so much, right? But if you've got 10 years or more, actually, if you're looking at it right now today, well, then you're looking at three different administrations. You're looking at the middle and end of the Obama administration, the entirety of the Trump administration, and here at the beginning of the Biden administration. You're taking into account a decent amount of ups and downs because we did go through kind of a minor recession there thanks to our good friend, the coronavirus. So as you're looking to filter things down, you want a fund that has been around for longer than 10 years. Likewise, you want to look at the rate of return. This is the next major factor to me, is what rate of return has it provided over that 10-year period of time. I want to know that over that 10-year period of time, that it's returned better than 10%. In fact, as I went up to look today, just to run through all the filter options, and man, there were dozens, okay? A bunch of stuff, a bunch of crap that I don't even care about, some stuff I don't even know about, and I was actually in the finance industry. I studied for my Series 6 and 63 securities exam so that I could help people invest in this stuff. One of the other things that you want to look at is whether or not you want to filter by whether or not the fund is open to new investors. There are hundreds, actually maybe even thousands of stocks, bonds, funds, things that you can invest in, but not all of them are open to new investors. Some of them are closed. And so you want to know about that. If you're just starting out, just at the beginning of your trek, you want to know what it takes to be a first-time investor. So if you can filter down, some funds require an initial investment of $100,000. If you're just starting out, you don't have $100,000. Well, probably don't. I suppose there's the exception to every rule. I sure didn't. So when you're looking those up, you want to look for what's the minimum they'll take to let you get into it. And you want to use that to filter. If you're just starting out and you're doing what I suggested and dumping in a small initial investment of a few $100s and then planning to put a little bit in each month to dollar cost average. And by the way, if you're curious exactly what dollar cost averaging is, it's a way so that you make regular contributions and you're impacted less by the volatility of the market, by the ups and downs of the market. A lot of people, especially with stocks and stuff, they're trying to time things. The idea in the stock market is to buy low and sell high. Well, if you're just buying consistently, you're not exposing yourself to as much risk. You're also not hurting yourself in the long run by missing those periods of gains while you're debating whether or not this is the peak or valley or not. But anyway, back to the initial point. You want to see, hey, can I drop in $100 and invest $100 each month? Once you've got those three things down, you still might be faced with choosing from tens or even hundreds of options. So you've got to go through and look at some other things that might matter to you. Are you socially conscious? Are you concerned about funds that invest in companies that are investing in green technologies, for instance? Just an example. If so, then there tends to be ways to filter or screen for that. Beyond that, I really, for me, the main focus is the rate of return. I want to know that over the past 10 years that it's returned at a decent rate. On the one that I was looking at today, there were options for 10 to 15%, 15 to 25, 25 to 50, and greater than 50% is the rate of return. That's awesome, which also goes to support my claims that but 12% is easily attainable, and better than that even is out there, because that's been my experience. I also look at how a fund has done since it began, so since inception. A lot of the funds that we're invested in have been around for 20, 30 years. And so I don't just want to know 10 years, I want to know over the life of the fund how well it's done. If it's done better than 10 or 15%, not only since not only for the last 10 years, but since inception, well, then really ranks high in my book, and I tend to look long and hard at it. Um, it's something that means a great deal to me. Then I start sorting by, you've got to have some way of separating them out. So I look at Morningstar ratings. Morningstar ratings, just in case you're not familiar with that, and by the way, don't be afraid to Google terms as you're trying to filter your funds and trying to get into investing and whatnot. I've spent a lot of time, and I still do. There's always some new term or technique or index or whatever that's out there, and I want to know what it is about it and if it's going to be useful to me or not. Not everything is. Morningstar ratings give you the strength of an investment based on past performance, and Morningstar ratings are updated monthly. So there's something you can rely on. They tell you how well a particular fund has done over time, how volatile it's been, how you can also look at, there's a Morningstar risk rating or whatever. Yeah, and so if you have a huge aversion to loss, if you're okay with gain in investing, but you are extremely averse to loss, maybe you're an older person who can't afford to lose any of their money at all, well, then that would be something important to you, and another criteria that you can search by. Me, I'm not as averse to loss. I know that there's risks involved, and I know that the market goes up and down. And if you're younger, you shouldn't be that averse to risk because you've got time to make up for it. These funds are professionally managed. People's necks are on the line. If funds start doing bad, somebody's head's going to roll. They're going to get in somebody that's going to right the ship. Especially a fund that's been around for a while, enough to weather some storms in the market. Again, that's my whole 10-year spiel. Obviously, that's a very, very big deal to me. Something else might be a big deal to you. But I look at all these factors when I'm trying to determine what I'm going to invest in, whether I'm going to take that particular leap or not.